So how much did you say that house price was over asking again?
Close to 500.
500,000?
Yeah.
Oh my god. Oh my
Yeah.
god.
Yeah. It got 28 offers.
Wow.
28 offers?
Yeah. I think more, actually. I can't remember the exact number, but an obscene amount.
So that was my friend Kaylee talking about her recent foray into the wild housing market that we're experiencing today in various geographic reasons. I mean, come on, we have to be in a bubble, right? But actually, what even is a bubble in the first place? A bubble is something that can occur in an asset such as the shares of a company or housing. A bubble generally starts by some or multiple factors being introduced that cause prices of an asset to increase more rapidly than normal. In the case of housing, this could be something like easing lending requirements to make it easier for more people to qualify to borrow money for a home. Eventually, this rapid rise in value gets noticed by speculators. In the case of the housing market, speculators will try and ride the wave of increasing home values by buying homes to try and flip, as well as rental properties to earn income. This creates positive feedback where more speculators buying up the asset drives up prices even further, and thus encourages even more attention. A recent example of this in action would be to look at the stock price of Tesla. It's going bananas as I speak, but I'd actually like to turn our attention to the months of January and February when it nearly doubled in a single month. Listen to how speculators flocked to Tesla when this occurred. According to Wealthsimple, they stated that 40% of the USD trading volume on their trade platform from February 3rd to February 7th was to trade Tesla. That's insane. So you can see how a positive feedback loop essentially creates a bubble type situation. So now the question is, are we currently in a bubble in the housing market, and is it going to pop? Today, I'd like to try and answer that question by actually providing both sides of the argument, because I think it's useful to try and view this question through the lens of objectivity. And this is kind of loosely based on something called the 10th man principle, where if you had 10 people who were supposed to be kind of arguing about something, let's say 9 of those people agreed because it seemed like the answer was pretty clear. Well, it would actually be the 10th person duty to disagree with everybody else. And the idea is that that 10th person would disagree because they're trying to expose flaws in what could perhaps be biased thinking. So this other 10th person would make their best attempt at an opposing argument even if they agreed with all of the other people. So let's start with case 1. Yes, the housing market is going to crash. In order for the housing market to crash a substantial amount, something like over 20%, we would have to already be working from the assumption that the housing market is in fact in a bubble. Let's first try to confirm this hypothesis by looking at the data around home prices. An easy way to see how home prices are trending in America is to look at the Case-Shiller National Home Price Index, which clearly shows that home prices are currently at all-time highs. Turning our attention to Canada, we can see a few charts that paint an even more troubling picture. Whether it's home prices versus the trend in the United States, home prices versus rent, or home prices versus income, the answer is the same. Home prices are clearly high, historically speaking. But that's not enough on its own, because after all, if we expect home prices to rise over time, which they do, then being at an all-time high by itself doesn't necessarily mean anything. However, I'd also like to show you another chart that I kind of gave you a little sneak peek of in my last video. This shows the relationship between inflation and home prices in America. Housing has proven to be a reliable asset to own to protect your wealth from inflation, largely due in part to the fact that everyone needs a place to live. And over long periods of time, we can see that housing does tend to trend with long-term inflation, which makes sense given that inflation is a measurement based on the cost of living. But we can see two recent instances where home values have drifted quite far away from the trend of inflation. Once right before the massive crash in 2008, and again just a couple years ago. Of course, history doesn't have to repeat itself in the future, but if this trend is to stay true, then it either means that home prices will have to drop about 32% or inflation will have to really ramp up. Both are going to hurt one way or another. Okay, so let's continue with our working hypothesis for the pro-crash side of the argument and assume that we are in a housing bubble. So now let's answer the question, how is it going to pop? Excuse me, I'm kind of in the middle of something here. Oh man, I am sorry. Sorry, what were you in the middle of there? I'm trying to think of what could possibly crash the housing market. Yeah, that's a tough one. I know, I can't really think of what that could possibly be. Oh God. Right, so clearly everyone is eyeing the pandemic as the pin that could pop the housing bubble balloon. And the reason for that is because the pandemic could have a fairly strong impact on the two forces that ultimately make up the housing market, which are supply and demand. As this situation drags on, housing supply could increase sharply once the restrictions on mortgage defaults are lifted, which looks like a situation that might start playing out as soon as the fall of this year. On top of that, demand for housing may decrease because people have less buying power due to the economic hardship caused by the pandemic. These two factors working in concert would result in a fall in the housing market, and perhaps a rather steep one at that. Another risk we face is the inevitability of rising interest rates. At some point, central banks are going to want to raise the interest rate because it's dangerous to keep them too low for too long, because then debt can get out of control. And you could even make the argument that it already kind of is. But a rise in interest rates would mean that mortgages become more expensive, which means that there's probably going to be a rise in mortgage defaults. Imagine you had just purchased your first home and you were really struggling to be able to purchase that home in the first place, so you bought a home that you could just barely afford. And then interest rates go up, which means that your mortgage payment is going to increase and you might not be able to afford your home anymore. So all in all, the case that the housing market is going to crash looks like it makes a few pretty decent points. But let's not jump to conclusions before we see the other side of the argument as well. So I think we pretty clearly established in the previous argument that housing prices are high, historically speaking. So in this argument, I'm not going to try and dispute that part. Instead, I'd like to challenge the idea that this recession will be the cause of a large decline in home prices. The first piece of evidence I'd like to present for this argument is this chart, which helps to clearly illustrate a fact that is relatively unknown. Recessions don't really tend to affect home prices all that much. Of course, the Great Recession in 2008 was an exception to this, but that was because the recession itself was caused by a huge problem in the housing market. Otherwise, the housing market tends to be pretty resilient, due largely to the fact that homes are such an essential thing to own. On top of that, I'd actually like to circle back to what we were saying in the previous argument about supply and demand. So we said that in order for home prices to fall, we would have to see an increase in supply and a decrease in demand. Well, as it stands right now, supply for homes is historically low in both Canada and the United States. And demand is high, in some cases ridiculously so. There's an entire generation of people ready to start buying homes, which essentially puts a floor on how low home prices can go. Simply put, if people are excited for a housing market crash, it probably isn't going to happen. When the National Association of Realtors surveyed its members in April, 63% said they expect home prices to go lower. When you have people actively watching and waiting for a dip in the market so that they can participate, that dip is either going to be extremely quick or it's not really going to happen at all. And yet, one of the most powerful points that I would present on this side of the argument is that governments are absolutely just hell-bent on protecting the value of homes. Can you guess why this might be? Well, there's a sizable middle-aged section of the population set to enjoy their golden years in retirement. And if we look at the composition of their net worth, we see that almost half of it is in their homes. This makes it crystal clear that the government is going to try and do everything they possibly can to protect the value of homes. Imagine if you were someone, or for that matter, even just imagine your parents or your grandparents working their entire life, and then by the time they reach retirement, maybe they're already retired, they see that their net worth drops drastically in value because there was a housing market crash that took out a huge chunk of their net worth. I mean, that would just have massive implications on the economy as well as on a political party staying in office as well. So this is why here I would argue that central banks probably aren't going to be raising interest rates anytime soon. And when they do raise them, I would think that they're going to do it slowly and carefully because they've gone ahead and raised them rather quickly in the past, but now we can look back and see how that caused massive problems at the time. So I think that they're going to recognize that they're in a very precarious situation here and they have to be very careful about raising rates too quickly or too soon. And so those are the two arguments that I would make for and against a housing market crash. Now, I'm sure that I must have missed some factor in my arguments. I couldn't include absolutely everything, but I hope that I made one thing very clear, and that's that nobody really knows what's going to happen in the housing market. It's impossible to predict these things. Markets in general are extremely unpredictable. Ultimately, if you're looking to buy a home right now, then whether or not the housing market might crash shouldn't deter you, because if you're financially and mentally ready to own a home, then pretty much any time is the right time for you to be buying a home, because that's going to be a place that you're going to live in, which is going to provide you psychological benefits outside of just the financial side of the equation. Maybe you want to start raising a family. Maybe you are sure you're in the city that you want to live in for the rest of your life or for a long period of time. There's so many other factors that go into being a homeowner, and a housing market crash really shouldn't be one of them. On the other hand, if you're a real estate investor, then I mean, you should just treat this like any other investment, which means leaving a healthy room for risk in your analysis of this investment you're going to make, because oftentimes when we run the numbers, we create models and we do analysis, they're wrong. They're not always spot on, which means we need to leave room for this kind of risk when you're modeling things out. And it's also important to be purchasing the right asset for your goal when making an investment. So if you do both of these things, make sure your model incorporates a good amount of risk as well as purchasing the right asset, then as long as you have that plan going in and you stick to it, the odds are going to be in your favor that it's going to be a successful investment. Now, if you guys are interested in seeing some kind of behind the scenes content or just kind of exclusive content that I don't post on here, you can go ahead and follow me on Instagram. I've actually had a number of you guys already send me messages on there, and it's been just great. I love hearing from you guys. And with all that being said, I'm Steve Antonioni, and this has been Cash College on the possibility... voice went weird there. Of a housing market crash. If you enjoyed today's video, please do all the stuff, hit the like button, subscribe if you're not already, and thank you so much for watching. I will see you again soon.